Burgess and Boltons weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy Friday. Happy new term.
Happy new term. Yeah, you can tell we're out of practice because I pressed the wrong button on the jingle.
Yeah, I know. Nobody noticed.
Nobody noticed. Hello, everybody, and welcome to this week's edition of Burgess and Bolton's weekly wrap-up. And as Ben says, a new term where we look at everything to do with the London market, technology change, innovation, and this week we're going to feature a little bit on talent as well as previewing London market claims coming up in October. But as always, I press the right button for the news, and pretty big news this week, Ben, with Adam Winslow moving from Aviva to Direct Line. And I know it's not necessarily a London market, a direct London market sort of news story, but it's significant. You know, anybody moving from Aviva to one of their main competitors is big, and obviously those companies do operate in the commercial line space. But I thought I'd just get your view, because you've met him a few times at different panels at Bieber and things like that, just to get your take on the move and what it means for both Aviva and Direct Line, I suppose.
Yeah, I mean, he's been I think well regarded. I can't tell from where I am, but it seems very well regarded executive at Aviva, one of the Amanda Blanc's kind of very trusted people. So at that level, you kind of think, oh right, okay, so someone very kind of loyal and has been quite a force, I think, within Aviva, has moved on. That's his choice, obviously, and he's actually relatively young still in CEO terms. Clearly very well regarded in the industry. So yes, I think it's almost certainly a lot. He's a nice chap. He's very professional. He does definitely has all the kind of CEO attributes. He comes across with gravitas and so on. But he's got a hell of a challenge now at Direct Line. So interesting that he wants to make his life more difficult, although he is being paid very well, I can see from the reports. But he's got a tough job there. That business has lost a chief exec. It has really miscalculated on the claims side on motor insurance, and now and given that that's a strong brand, Direct Line, he's got a lot of work to do. He's got his work cut out. So he's really talking a lot and focusing on the customers and what he's going to do. But I suspect he's got a lot of work to do in the financial side as well of that business. Yeah.
No, I think it's really interesting when you think about the opportunity, and what motivates people to switch. Obviously, you mentioned the money, but there's got to be more than that, hasn't there? So he must feel that he's in a good place to turn it around.
I mean, the money's obviously going to matter, and the opportunity. I think it's good. To be honest, I think in a sense, Aviva was quite a safe bet. It's been quite successful over the last few years, and I think, relatively speaking, quite stable. So to see people like Adam going on saying, I'll take something on that's a challenge and is difficult is good, really, because I think it's problematic when CEOs, when it's a bit of a merry-go-round of just cherry picking the best jobs. So I think it's good. I think Aviva's obviously looking at potentially a Lloyd's, more Lloyd's participation. They are very present, obviously, in the London market now. I think as well, but that what we're seeing in data is there's much more of a fuzzy line now between London and the rest of the market. The market is much more, just commercial market anyway, it's just kind of much more joined together, I think, or merging. So it is interesting and it's relevant.
Yeah. Good, excellent. So as always, we'll keep an eye on that and see how Adam gets on there. But Ben, for the first time this season, this quarter, this whatever, here we go.
Hey Ben, what's the word on the data stream?
So, what's the word on the data street, Ben?
Okay, word on the data street. So what I've done this week is I've had a look at really the Swiss Re reports, the Sigma reports, which are very good. They've been reported in the FT, I think, earlier this week. And I just wanted to pick out a few things, really. And I think these reports are so good. They're so kind of fundamental. They give you context about the whole market. So I had a quick rifle through some of these to see what's happening in the global markets at the moment, and just to give people context and ourselves as well, really, when we're talking about this. And I thought this was an interesting chart. It's one I hadn't seen before, which shows the relative scale of the commercial market that we talk about, the commercial lines market, versus other parts of the insurance industry that we don't really touch on, so personal lines and health. And I think the first thing surprising is the size of the health market, and we discussed this earlier. It's probably because of the size of the US health market in particular that it's so big.
Yeah.
But that is nearly a half of all premiums, if you like, in the global non-life area anyway. Sort of life and pensions, not in here. So then the next biggest is commercial lines, just slightly bigger, but pretty much the same size really as personal lines, which I didn't know. Actually, I thought personal lines would be bigger. In my mind, I had thought that. And you can see personal lines, as expected, is dominated by motor. So the vast, whatever that is, not the vast, but the majority of that is motor business, which is why that's impacting on inflation so much around the world. Yeah. And then actually you look at commercial lines, and actually property, which I thought was by far the biggest, is only just the biggest actually. And the liability, motors, kind of fleet, commercial motor, and then other, all the stuff we look at a lot, cyber and everything else, is in these kind of nice, neat chunks. So it segments out quite interestingly. But it's I just thought it was interesting just to get a sense of the scale of it, and how it broke down, and kind of one of those useful charts, really.
Yeah, to kind of benchmark when we talk about the things that we talk about in the sectors. It's quite interesting to see how that fits into this kind of global kind of map of what's going on. And then that leads us on to a few more stats, which are pretty interesting as well, at a kind of macro level, I suppose.
Yeah, so these are the forecasts or the analyses from Swiss Re of what's going on in the property and casualty market in particular. So what this is fundamentally saying is that the profitability looks okay going forward, and premium growth probably will be constrained ultimately by economic slowdown and the impact of that and interest rates. But at the same time, there is, premiums are up, and therefore there are better combined ratios and better investment returns. So you can see that certainly compared with 2022, the market isn't too bad. Okay, it's not off the scale. It's pretty much, what you'd expect, but there is an underwriting return at the moment that they forecast going forward. So that's the first thing. And it's reasonably healthy. Where they do draw attention, though, is there's been a diminishing amount of reserve releases apparently, and there are other things going on in the market which they say question whether there is enough reserve, or what was called reserve adequacy, for claims that are unsettled. And they draw attention to things like COVID-19 claims, evolving claim risks and claims that are coming through that are as yet not settled. So there's a sense of quite a lot in the pipeline, and that may well mean that reserve adequacy is not as high as it should be, and is getting squeezed. So that's kind of A little bit where we've heard other stories. I think Stephen Catlin has talked about this, that the COVID one is a big one that needs to be sorted through the reinsurance markets and things. So, but it is what the the report. I think one of the reports I read describes the insurance market as not a multiplier of risk; it's an absorber of risk. So, in other words, it kind of sorts things out through its thing. Whereas when you look at banking data, something there could mean that it's a problem. It's causing a problem. So this is quite reasonably settled and not as bad, I think, as people had thought, given the economic conditions.
Yeah. So a couple of good charts there just to really set the context of, I guess, what we're going to look at over the next few months. And I think we'll probably refer back to these charts and give us that kind of global benchmark, especially when we're talking about London market issues and challenges, because it's just useful to see where we are in that global context.
And I think that there's some other kind of interesting side stats to that. So the growth of commercial lines the profitability of commercial lines is forecast quite positively compared with personal, for example, because the rates have gone up. So generally speaking, it looks like there is profitability in these businesses, albeit that it will be constrained by the economic conditions going forward. Then the other side of this is where is the growth going to come from? And that's very much focused in their view on Asia, the emerging Asian markets. And they've really singled out China, interestingly, even though I think some of the news recently on China's growth was quite downbeat. So that they may not be correct about that. We'll have to see. I mean, this is all forecasts are guesswork in a sense, but they are saying that the multiple of growth in Asia is 3.3 times that, for example, in the Eurozone.
Wow.
So quite a lot. The growth here in the European unit, and I guess these markets is quite low. Although London is an international market, of course, so it's writing business all around the world effectively from that geography.
Yeah. Great. Right. Thanks for that, Ben. Sets us up nicely for the conversations that we're going to have over the next few weeks and a month. And related to kind of those figures are a kind of another story around innovation from AM Best, which is both interesting, but also a little bit woolly in places, we might say.
Yeah, I mean, this is the AM Best has been pushing the innovation piece for a little while around the data that they collect. Now, AM Best has, will have some restrictions. It's a business that obviously rates organisations, and that, as a ratings agency, means it is constrained on what it can and can't do, and it really is very closely based around or focused around the financial data, not other aspects. And I would argue that innovation is many, many things, not just the financial data. So I do think it takes a little bit of somewhat narrow view of innovation, but that's fine. I mean, it adds to the story, and there are some interesting points. They pick out reinsurance as what they say is one of the more innovative parts of the market, and interestingly, they say it's because it's simple. It's quite a simple business. It doesn't have all the complexity of just normal insurance or even what the cedants do in terms of claims and all that stuff, policy issuance. So really, they're saying that reinsurance is innovative because it's been innovative around its financial engineering. Well, that's kind of it is a point, but I'm not so sure that is necessarily that innovative in terms of what I would want to see the insurance industry doing. It is covering raising rates, using models, economic models, actuarial models, etc., quite well, and that allows capital to be better deployed, which is good. But it maybe that's because they've only got the financial data, so it really points them towards reinsurance. I'm not saying it does. Happy to have the discussion. The other points they make, though, are really that most of this innovation is happening in personal lines and not and sort of SME type stuff, rather than in the classic Lloyd's type P&C markets. Now, that is interesting because I think they make this point that still it's all about boots on the ground and very traditional ways of working, and they say they don't really see that changing very much, which is interesting when we look at what we talk about in the market, that we think there is certainly some appetite for innovation and so on, but AM Best seems to pour quite a lot of cold water on that in relation to other sectors. Now, again, I don't know if they're right or they're wrong, but that's the view that they take. And then more widely, there is a kind of interesting piece here where they've talked about how much innovation is working in back office functions, but like administrative functions, where effectively this is making the customer's experience better. And they have this phrase in one of the sentences: the idea that insurance is a low engagement segment is becoming outdated. It's a very interesting comment, actually, which is that what they're really, I think, saying is that the experience of insurance is not one in which it's just a transaction in which they don't touch the sides, nobody gets involved, they just happen. They're saying that actually this is and I'd see this as being an opportunity where people do interact quite a lot with an insurer over a claim or even a policy, and that's an area where innovation can really improve things in the industry. So I think they do make some really quite interesting points. So I'd be interested to kind of follow this report as it goes forward and see where it fits with other things that we're looking at.
Yeah, I mean, and our take is, well, not our take, but I mean, what I've seen in the research that we've done, and perhaps what you've done as well, Ben, is that the way that innovation happens within organizations, you don't just do innovation. It's part of your kind of almost your DNA, or it isn't. So yeah, it's quite difficult to look at one kind of metric like you've been talking about, kind of the financials and going there, being innovative there, where we kind of talk to people and we see like it's that kind of the way that they can perhaps use technology to take a very clunky bit of customer experience and turn it into a smoother or speed up that part of the process. That for me is where real innovation happens, because that creates an environment where people go, oh look, we've managed to change that for the better. What else can we do? And you create this kind of kind of a culture where people just want to try things and really kind of change the way that insurance is either delivered or experienced or whatever, however you want to phrase it. But I get a sense that is real in the industry. The people I talk to, anyway.
I completely agree with that, and I think that's partly what I think this paper misses, which is that this is a structural view almost of innovation, which is that it's financial engineering, or it's IoT, or it's things that are visible and tangible that cause and then result in something better in the finances. Now, that's one way of measuring it, but actually and then they're quite, as I said, they're sort of quite down on the fact that they assume the implicit assumption in here is that boots on the ground, the traditional ways of working in London are people-based things, therefore they don't count in innovation. But I think you and I know, and people in the market know, that you can do all sorts of things with people in terms of innovation and how they service and how they operate and the efficiencies, which are innovative. And perhaps that's one of the most innovative areas there is, which is, great values, people who know what they want, engage, build relationships, entrepreneurial, all those sorts of words. But I think it gets a bit lost in this take, really. Yeah. And I'm not the only one who would say this. I think much of what success comes from in business and economies is from ideas and people with, if you take YouTube, and influencers, for example, I mean, how do you measure that?
Yeah.
Well, you can measure it by their income and things on YouTube and things, which is huge, but it kind of would have been missed in this structural analysis of innovation.
Yeah. It's really interesting, and it's something that we're going to try and look into more, isn't it? Kind of how we can measure innovation in an effective way, and it maybe even put together some kind of league table or some kind of benchmarking. Because I think it'd be useful for people to understand what innovation means in this sector. What does good look like, and what are people trying? Because if you do that at an industry level, then it sparks ideas, and that's why people come to our conferences. That's just one of the outcomes, isn't it?
Well, I think that and I think the AM Best paper does touch on service and the experience and so on, but I don't think that's their bag and it's not their expertise. So they get it, they pick it up, but I don't think it's kind of not rich enough in the analysis. I mean, if the industry could improve its service, I think it would improve its efficiency and its trust and grow. So I think that's innovation too.
Yeah. Cool. So as I say, we will be doing more work in this area. If anybody is watching this and wants to get involved, please drop us a line either through LinkedIn or whatever channel, and we'll involve you in whatever projects are coming up. Okay, let's build on that a little bit, Ben, with a talent report that we saw, rather you saw this week on LinkedIn. Is it written by Aon or sponsored by Aon?
It's written by Aon. So it's written by Louisa Blaine, who is one of the directors of the Aon Human Capital Solutions, a consultancy part of Aon. And they have interviewed, I think, a large number, up to 50 CEOs in the market about talent. So while it's a short paper, there's a lot of work gone into this. And I will just say that I was kind of involved in some of the early discussions about this paper, but I didn't have any hand in putting it together.
And it's quite interesting because of the angle it's coming out from, a very strategic, a CEO's point of view on talent. But I think for us, it kind of perhaps doesn't go deep enough in terms of the complexities of talent and perhaps how we need to think about it. So should we just give a bit of a summary about what the report's about?
First of all, I'd say I think it's a really good paper, and I think it is probably the start point for Aon, who are looking at this whole area, because I know that there's a lot more data here than is said, but they make some really, really important points, I think, and these are around the fact that they say just describing the issue of talent as a talent shortage is too superficial, and it doesn't really recognize that it's a complex issue that has to be solved by businesses in insurance or any industry. But it is really quite complex, and they focus on kind of a number of aspects that have come through. Now, remember, this is the CEOs themselves, so there will be other viewpoints, and I might introduce some of those. So the CEOs are saying that, one, they're all over this, and it's really, really crucially important, but they've got to do something about it. Two, that this is the Aon view, is that the industry has a image and a reputation problem, and we've heard this before, and therefore it finds it hard to attract talent. And three, which is linked to this, which is that the industry now needs to attract different talent. And what they're really focusing on here is more flexible talent, not just kind of very specialized in particular classes of business and so on. It is a much more, I suppose, kind of agile, flexible, curious, I guess even innovative kind of people who come in, who are bright and capable, more like, I think, Caroline Bedford, friend of the show, was talking about in terms of these generalists, very capable generalists who can see the bigger picture, and look at what's going on. And I think this is, moving the argument on, which is great, and it moves towards what are the solutions. But it has this, the blocker, as they see it, is is to some extent the industry's reputation, some of the damage it's suffered, particularly through the BI claims issues, et cetera, et cetera. So that there is and then again, this is obviously from research. So this will be the internal view of the market and of itself. So it is somewhat mea culpa, I think, in terms of the executives here saying things have to change. I think the paper's probably, as you say, is a bit light on where you go with detailed specific solutions, but fair play, they are consultants, so they'll want to keep their powder dry and all of that, rightly.
Yeah.
I think my view is that I don't have a massive difference of opinion, but I think we can go too far with the argument about the boringness or the lack of appeal of insurance. I think many industries are not intrinsically interesting, and I don't think people these days in most businesses that are not the traditional professions are looking for some kind of vocation in insurance. I think that was probably a bit the case in insurance. You know, there's lots of kind of nepotism, father, son, daughter, you know, people coming in, following into the market. There was huge amounts of that, I think, in the past, and still probably is. But I don't see insurance as being one, you know, now going forward or will be going forward. I think it's really more about the brands themselves, the insurers themselves, and how they portray themselves just as great businesses to work for. And I think that's about modernization, better communication, you know, cultures that people want to work in, opportunities, you know, all of those things we don't communicate well from the businesses that they are. So I think it's very easy to say, oh, the problem's over there somewhere, which is just the reputation of our industry, and someone has to solve that. But I think the problem's within, in a way. I mean, we're very old-fashioned. We're still old-fashioned, you know. We look old-fashioned. We're very male-dominated. You know, ethnicity is quite low. Yes, it is changing, but very slowly. And a lot of those attitudes, you know, in the individuals are quite, you know, kind of almost 1950s, you might say. Some of them, you know, in a way. Whereas the rest of the world isn't, and that is the difference. The rest of the world isn't like that, and the leaders are not like that either.
Yeah, I think it's interesting what you say about kind of brand and communication, because I think if you're looking around and you are, you know, the next generation, and you've got, you know, choice, and I know they have, because I've been trying to recruit young people into my business, and they've got so much choice, then it's not about, I would say, exactly what you do, just like you were saying, Ben, but what are the opportunities that you can provide for them to grow, develop, be innovative, and make a difference. And that within insurance, you know, if you talk to people who've worked in insurance a long time and you say, why have you stuck at it? They tell you, you know, in honest, open, plain language, there's, you know, what we do really helps people. We've got a purpose. Yeah. The people who I work with are majority are great. I get on with them. And, you know, I get paid, you know, a decent amount. And, you know, you take those three just very simple, basic things, and you start to communicate them in a positive light. I think you will start to kind of touch the edges of some of the solutions that we need to think about. As
you know, I agree with you completely. I mean, I just go back to the same thing I said about the AM Best thing. I think a lot of this comes down, and again, to a literal or a kind of structuralist view of what the problem is. And this is not the Aon paper particularly, but I think it's much more about the psychology of recruitment and about how people feel, you know, the why of the business. And that did come through in the paper, to be fair, and it was commented on in the LinkedIn, which was a good discussion, a short discussion, but a good discussion about it. So I think the why you want to join a company is really, really important to understand. I don't think the businesses have enough understanding of that. I don't think they understand their own reputations very well. We know that. That's why we've had scandals, and we had another one about a week ago. So there's a lot that still is not really addressed or confronted or we have data on. So we still rely heavily on the anecdotal. I think the whole debate about hybrid working is very much kind of, you know, my way or the highway sometimes, and that doesn't look good. I think even John Neal said something similar to that. I think that all these businesses, if they want a sophisticated, modern, flexible kind of work talent that they attract to this market, have got to think the same ways as those talented people do, which is, I want flexible working. I want a business that's thinking about how we work together, not just one that says you either come into the office or you don't come into the, or you're not going to work here type thing. And I'm not saying, I'm kind of simplifying to make the point, because not everybody's like this, but
yeah,
senior executives have really got to rethink or rewire a bit and listen a lot more, I think, to people as to what they're saying, because I think you can look at data that will say that, people can work from home 100% of the time in certain jobs and certain roles and certain types, but in other jobs they're different. So it's not binary. And I think we don't want to be left behind on that sort of thinking, because other industries will then get the talent if they get it right.
Yeah.
So, what I guess I'm saying is, we tend to go for pat, simple answers, mantras, but I think that in, for example, the consulting sector or the tech sector, or possibly, I don't know, but even the pharma sector, they're looking at this as an intellectual challenge that needs to be solved if you're going to attract talent. And that's how I think we need to do this.
So it's really interesting what you say about the kind of psychology of recruitment, because so often it's kind of a rational argument that is put forward in either industry campaigns or whatever it is that, this is what we do. And you kind of going, well, like you were saying, where's the why in all of this? What's the point? Where's the opportunity?
Yeah.
I think,
and I think in jobs you've got to work with what they call counterfactuals, because obviously when you sell somebody in on a job, and I think there's always a thing that intrigues me, is you tell people it's going to be brilliant, it's fantastic, there's the pay and rations, this is what it's going to be, and we've got all these ambitious ideas and everything else. And the first week everything's lovely, and then at some point in time you have to say to somebody, no, but you have to do it like this, because that's what it is, right? So there's a good show on I think it's Disney Plus, actually, but other channels are available, called The Bear, which is about the chef taking over his brother's failing kitchen in Chicago. But the whole thing really is about discipline, how much effort you have to put in to make things work, and about working in a tough environment. And I think that, those are things that when I've seen clever advertising campaigns about work, they get that across, that, this is tough, this is going to be hard. So if you think of a Goldman Sachs, yes, it's going to be tough. You're going to be in at 5:30 in the morning. You're not going to be going home at 10 at night. You get paid really, really well. But there's something more to the psychology than just the pay. It's that I've got the Goldman Sachs badge. I've done the time. I've really worked hard, and I've seen something that many other people won't see, perhaps. So we need a bit of that. I think we need the stories, the things that probably are there anecdotally in the old guard's heads, but have never really been brought out. The war stories, like.
Yeah, and I think just to kind of bring this section to a conclusion, if you think about what we've been talking about in terms of kind of the global numbers, the innovation and the talent, it all points towards service. And it's those organizations that can win on service, that can drive better client outcomes, customer outcomes, that can allow space for new ideas to come to the fore, be tried, tested, improved, and they're going to be the winners. And I think we're going to spend a bit of time, not just at London Market Claims, but at other events as well, focusing on the service element and how these different threads need to come together and improving their client customer service. So I think it's going to be interesting.
Yeah, and it's the one area you can do something about. I mean, lots of the other aspects of the business that we looked at, say in those Swiss Re numbers, you can't do much about rate, economic conditions, the emergence of China. You can't really do anything as a leader of a business in London about those things. You need to focus on that customer stuff, which is what Adam Winslow said he's going to do at Direct Line, right? He's only got one way to solve it, and he's got to have happy customers.
Yeah, definitely. Right, good. Thanks for that, Ben. Good chat to open up our new term season.
Yeah.
Want to call it?
Season.
Yeah. So let me just give a bit of a plug to London Market Claims. So that's coming up next month. We're going to do a proper preview show in a couple of weeks' time because we've got a great bunch of speakers and we got some really interesting themes this year. But I just thought I'd give everyone a quick update on that. That's in a month's time. And then what are we doing at the weekend? What are you doing at the weekend, Ben? Are you doing anything?
No, not a lot. Very little. I'm seeing my dad down in Eastbourne. That's it.
Nice.
Not much else. I've got. It's been a bit busy coming back. It's a bit of a shock coming back from holiday.
Yeah, I know. I was just thinking this time last week I was ice skating in Belgium. Who'd have thought that? I didn't. But there we are. I was.
That should be an album. Ice skating in Belgium.
I was, for some reason this morning, I thought if we set a band up, what would our band be called? And I thought maybe it called Jez B and the Boltons.
Well, we've got to get some better suggestions than that.
Yeah, I know. There we are. Right.
Did you have any other names?
No, I just, for some reason, I just thought of that. I don't know reason. It's just how my head works. Well, or doesn't. Yeah. Anyhow. That's it. What am I doing? I think I might take the boy fishing. So, yeah, it's going to be nice this weekend. So, final weekend.
Beautiful Indian summer next week. Yeah. After the rain, as ever. So the kids go back to school, and it's sunny.
Yeah, perfect.
Hopefully, the schools won't fall down around them.
Yeah, that's. Imagine that. It's the heat that actually destroys the concrete. That would be.
There's an insurance story coming out there.
There will be, won't there? Keep an eye on it. Yeah. Good. Right. Thanks, Ben. We shall be back next week. Have a good weekend, everybody. And see you soon.
Have a good weekend. Bye.